If you look at global liquidity and Michael's thesis says that every 6 to 7 years, the global liquidity goes in these cycles, right? 6 or 7 year cycle. We're coming to the end of this expansion of this cycle, which means that it's supposed to, this cycle is supposed to end at the end of this year, beginning of next year. So if you think that global liquidity starts to tighten, if it's being drawn out, then at the beginning of next year, that would give Bitcoin to somewhere in the spring to summer to kind of top out, all things being equal, Does it follow it perfectly? No, of course not. It's Bitcoin. It sometimes wants to march a different way, but it typically does correlate to it over those long stretches.
Bitcoin's next big move may already be written in global liquidity, and the charts show an 88% correlation you can't afford to ignore. James Lavish, a former hedge fund manager and CFA, warns that Bitcoin could slip toward $104,000 as markets digest a recent rate cut, a move he views as a healthy flush to clear out weak hands and excessive leverage before the next powerful uptrend. While the market drifts in quiet summer doldrums, Lavish emphasizes that volatility is far from gone. In fact, he expects sharp swings both to the downside during drawdowns and to the upside when central banks inevitably step in. His analysis points to one critical driver: global liquidity. According to research by Michael Howell of CrossBorder Capital, liquidity expansion, not just M2 money supply, but also factors like debt, bond volatility, and shadow banking, has been the strongest force behind Bitcoin's movements, with price action typically lagging by 10 to 12 weeks. The data is striking. Across this current cycle, Bitcoin's correlation to global liquidity stands at an impressive 88.44%. That means liquidity trends have been one of the most reliable predictors of Bitcoin's path. And with the current expansion cycle expected to peak by early next year, the clock is ticking. For investors, the message is clear. Bitcoin remains tightly bound to liquidity flows, and the next big move could catch the market off guard. Crypto's story is still in its opening act. The biggest moves are yet to come. Stay tuned, subscribe, and turn on notifications so you're ready when the market takes off.
No, I still think we're going to see periods of volatility, extreme volatility when there's market drawdowns, in particular, and then extreme volatility to the upside when there is a reaction to it from central banks. So I still think there's going to be volatility, but just we're in this period of summer doldrums, just quiet. It's just grinding sideways, waiting for something to happen, waiting for something to move. It's been mostly following expansion of global liquidity this whole time. It just lags by 10 or 12 weeks. One of the guys that I talked to and I really respect his work is Michael Howell of CrossBorder Capital, and he writes these pieces. He's got a great Substack. It's expensive, but to me it's worth it. But he has a proprietary model, Danny, that measures how much liquidity there is in the globe, around the world. What's important about this is it's not just M2. It's not just the money supply. The M2 is the largest component of it, but it's also just the amount of liquidity that's out there that is attached to things like debt. And so when you have, so he has this measurement and it's proprietary, and I don't know exactly what it is and how he calculates it, but it includes things like volatility of bonds, because when bonds are very volatile, then your counterparty requires more, they require more collateral because of the volatility of the bond. And so that means that it takes liquidity out of the market, right? You have less leverage, or lower leverage. So that's one of the things he does. He looks at things like the shadow banking, the private credit and where that is going. So I really do respect his work and follow that. But Bitcoin's been following it closely. Gold's gotten ahead of itself here, according to those measures, but Bitcoin has been following it, and I think that we're going to continue to expand liquidity here going into the fall and up to at least the beginning of next year. So I'm not worried. The only thing that concerns me is some sort of black swan event that seems to come every 7 to 10 years, and that the 100-year event that comes every 7 to 10 years now. So it's not 100%, but it follows it in an extremely tight correlation, meaning if liquidity goes up steeply, Bitcoin goes up steeply, lagging it by almost 3 months. Comes down if liquidity is drawn out of the system, it feels it. So it does the same thing. And what's interesting about this is stocks do the same thing, equities, because people use those as places to tuck capital in order to protect it against inflation. You know, they use stocks, they use gold, they use Bitcoin. So it's interesting. It's really it's become one of the best closest correlated assets to liquidity, global liquidity, over the last couple of years. So it's not rapid, but it's still expanding. And but you have these periods. So if you look at global liquidity, and Michael's thesis says that every 6 to 7 years, the global liquidity goes in these cycles, right? 6 or 7 year cycle. We're coming to the end of this expansion of this cycle, which means that it's supposed to, this cycle is supposed to end at the end of this year, beginning of next year. So if you think that global liquidity starts to tighten, if it's being drawn out, then at the beginning of next year, that would give Bitcoin to somewhere in the spring to summer to kind of top out, all things being equal. Does it follow it perfectly? No, of course not. It's Bitcoin. It sometimes wants to march a different way, but it typically does correlate to it over those long stretches.
Bitcoin has quietly absorbed massive selling pressure. Now, with a Fed rate cut looming, the next explosive breakout could be closer than anyone expects. James Lavish notes that many investors are showing signs of fatigue after Bitcoin spent the summer grinding sideways between $100,000 and $120,000, leaving some to wonder if the cycle has already peaked. He explains that the sluggish action is partly seasonal, as summer historically brings lower volumes when traders and hedge funds step away. Yet despite extremely light activity, Bitcoin has absorbed hundreds of thousands of OG coins, hitting the market with barely a dent in price, something unimaginable just 5 years ago. At the same time, capital flows have been temporarily redirected into Bitcoin treasury companies, with raised funds not yet recycled back into BTC. While this has created a muted stretch, Lavish remains bullish in the near term, pointing to the Federal Reserve as the next catalyst. With Fed funds futures now pricing in over a 100% probability of a 25 basis point rate cut, Bitcoin could be poised for a breakout as liquidity conditions ease. Meanwhile, the U.S. economy is flashing early signs of stagflation, sluggish growth and rising prices, further fueling the case for hard assets. Analysts warn that when momentum returns, it could spark not only a Bitcoin surge but also massive gains across select altcoins, setting up the next explosive leg higher. Let's get back to the video.
Well, I mean, first of all, people have been frustrated just because I think they're a little bit fatigued. It's just been a long, grinding sideways summer, If you start out in the late spring, we were grinding from 100 to 110, and then we ground all the way through until July, and then we started grinding from 110 to 120, and now we're back around 110 now, a few days ago, and people are like, what are we doing? Is it? Have we hit the high? Is this cycle over? Like you said, is there no more cycles? Are there no more 4-year cycles? Like, what's happening? And at the same time, you had this a little bit of euphoria around the Bitcoin treasury companies, and we can talk about that, but got ahead of themselves a little bit, and they pulled back, and people were getting fatigued about that, and voicing their concerns about it. And I think that it's just the summer, I mean, this happened so many years in my career, Danny, where we're just sitting here in the summer. It's like, what is going on? And we're hedge funds. We're sitting at our desks every day, and there's nobody in Europe. There's nobody in Australia. Like, everybody's just off on holiday, and which is fine, and you should be. And we actually found that they have a robust backup system there because people are forced to go away for weeks at a time. And so, but if you want to trade in July, August, early September, good luck. There's nobody there. So, but it's the same thing here in a way, in that's when people take off because their kids are off in school and all that. And so you have young executives young investors who are taking off, and they're not active as much. And so the volumes are way down. So if you look at Bitcoin, volumes have been really, 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 really light. I mean, there's been nothing that has been shocking. And even though they're really light, the the market, the street has just swallowed hundreds of thousands of OG coins that we know of, and that they've just like, and the price didn't really move, I mean, a couple percent, maybe. If you tried to sell 80,000 coins 5 years ago, but it just swallowed them and just kept going, just stay where it is. And so, and you had some people that were also at the same time, Danny, they're selling Bitcoin to turn around and buy treasury companies, and treasury companies get that capital, but they're not, using it yet, or they're getting capital from private funds like mine, and or hedge funds like mine, and they're not deploying it yet. They're not buying the Bitcoin yet. So capital's coming out of, and we physically send Bitcoin to them or whatever. And so that's like, there's either selling of straight Bitcoin, or just a pause in buying of it. And then because of the MNAV situation, if you've got companies that are tapping the MNAV, that tap in the ATM with their market, NAV to Bitcoin over 1.5, and that you're not buying, you're taking dollars out to buy these companies that would have otherwise probably just bought Bitcoin. So that's 33% of the capital that's not being used by Bitcoin. So it's been a weird period. But all that said, am I bullish? Yeah. And I'm actually bullish short term too. I mean, now we're in a situation where all eyes are on the Fed. Like every single thing that happens on Wall Street is kind of centering around these economic indicators that are pointing to the Fed having to ease. And so it's priced into the market. 25 basis points is priced in. If you look at Fed fund futures today, you pull them up on Bloomberg, you're looking at it's over 100% probability there's a cut next week.
Bitcoin's sideways grind has left many impatient, yet the signs beneath the surface point to mounting strength. Global liquidity remains the key driver, and with a Fed rate cut all but certain, conditions are aligning for a powerful move. The market's ability to absorb heavy selling without breaking down showcases resilience that few assets can match. At the same time, volatility, both realized and implied, has continued to decline even as Bitcoin trades near all-time highs, a rare signal that often precedes explosive breakouts. With stagflation risks rising and liquidity cycles nearing a turning point, the window to position before momentum surges is rapidly closing. If Bitcoin is showing record resilience, falling volatility, and a Fed-driven liquidity boost ahead, are you positioned before the next explosive breakout? Crypto doesn't wait for anyone. Join the conversation in the comments, share this with your network, and turn on notifications after subscribing to stay ahead.